Holy smokes, everyone. What a crazy couple of weeks it has been in the markets. Now, I know you're probably thinking, where have been, why haven't I been reporting on the things that have been happening? And to be honest, I've already put out all the warnings for everything that is happening right now. But in this video, I'm going to go over the huge announcements and highlights what happened in the markets over the past 2 weeks. It's going to be an action-packed episode full of information and data of things that have happened and things that I've warned about that will happen. Because what I'm seeing with these two new huge announcements that happened over the past 2 weeks is there's about to be a massive shift in the markets, in the economy. Let's not waste any time, everybody. Let's get straight into it. Okay, now first things first, what are two main issues I've been talking about at length for months that I've been warning about, some big risks for the markets and for the economy that have happened over the past 2 weeks? Well, that of course is Evergrande and also the Federal Reserve, what the Federal Reserve is doing, which I'll get into in a moment. But first, let's talk about Evergrande. It came up about 3 months ago when everybody found out how much debt and liabilities Evergrande had and how big of a risk it is to China's housing market. Now, like I've been talking about and warning about, China's housing market is a housing market like no other. It is valued at $62 trillion and it is the biggest housing bubble we've ever seen in history. Because remember, in China, they just buy apartments, they don't even rent them out. They like to keep them brand new, just shell apartments. They don't even furnish them. They don't want people to live in there because they don't want to inherit people's bad luck. And so this is what created the ghost cities, along with the local governments and the local developers just building these apartment buildings and building these cities to sell them off to investors that did nothing with them, hoping to sell it in 5 to 10 years for a profit, because after 20 to 30 years, they're probably going to demolish the building anyway, because you don't actually own land in China. You just lease it off the government for up to 70 years. Now, when this news first came out, there was a lot of fear that this will cause contagion and could be a Lehman-like moment for China. Now, of course, a lot of people said, don't worry, China will bail them out. You know, there's not going to be no issue. They'll just get a bailout and it'll be like nothing. Which, of course, is what they do here in Australia and in the US. Whenever, you know, a billionaire gets a little boo-boo, they have a little cry and the government says, oh, we can't have that. We can't have any billionaires losing any money. So it's really socialism for the rich and the elite, and it's capitalism for the poor and middle class here in the West. So a lot of the news anchors were using their Western mentality that Evergrande would get bailed out. But after I did a bit of research on the CCP and some of their agendas going on, they actually want the housing bubble to deflate because it's posing huge risks to the financial system. And that's also what's happening in the US and Australia with us, with everybody pouring all their money into real estate, all their money into the stock market. If everybody's money goes in there and if then that pops, well, then of course that creates huge financial instability. That's something that China doesn't want, and they're planning for the long term. So they did let Evergrande go down. But of course, you're wondering, well, how is this affecting the markets? It hasn't seemed like there's been too much drama right now. Well, we have seen a bit of weakness in the Asia markets, specifically the Hong Kong Stock Exchange. It has fallen from around 31,000 down to 23,000. So the Hong Kong Stock Exchange is already in a bear market, and it is already falling, and it looks like it's collapsing. I'm looking at it and it seems like it is much more red throughout the week than they have green days. Also, we're continuing to see articles now because, of course, what happens in a speculative mania frenzy with investors, well, when things are good, they'll pile in. But as soon as things turn bad or investors think that prices could go down, well, that creates an avalanche of people getting out as well. And what have we seen? We've seen housing sales plummet in China. We're seeing new development sales plummet. So we are going to start to see more and more data of house prices starting to fall in China. And that's going to have big consequences for us around the rest of the world, because remember, China is the second biggest economy. And also now with what I'm about to get into the US in a moment, the two biggest economies in the world going down at the same time, that's going to be bad for the whole world. So really, why it seems like nothing major has happened yet, these things take time. And I'm sure we're going to get news soon, because remember, I always report things months before they happen, because it's no good, me reporting after it's happened or the day before it's happened, because it doesn't give people time to prepare. So like I was saying, I expect we will get news over the next 3 months that show house prices and the housing market is starting to fall in China. And another trend that's been happening is there's been huge amounts of delisting of China's companies on the New York Stock Exchange. This is also going to cause more investor hesitancy to invest in China, and also I'll get into in a moment how this is affecting the high growth, high risk investments and assets. This risk is causing yields in China's bond market to absolutely skyrocket. We're seeing the junk bond yields go all the way up to 25%. And as I've already reported, there's been huge amounts of defaults in China, a record amount, and this is going to cause an avalanche of more defaults. As you think these companies are going to be able to afford these interest rates? No, they won't. So it won't be Evergrande going down on its own that will be the Lehman moment, but it will be a domino effect that is going to have effect on China's economy as a whole, and also on the credit market in China as a whole, because we're seeing the China credit impulse has been plummeting. And remember, economies these days, they rely on debt to grow. They don't rely on the money we have now, they rely on more and more debt. And this brings me into the second part of the video, which is another huge announcement, and something that I've been warning about is what's happening at the Federal Reserve and how this is going to intertwine with what's happening with China and around the world. What have I been warning about, everyone? And what have you also been warning about, my viewers on the channel? I've been warning that inflation is going to get out of control. Now, unfortunately, I thought the Federal Reserve would have more credibility and actually act on this crazy inflation that we're having right now 3 months ago, 6 months ago, when they should have. But no, they tried to delay it as much as they can. They're really dragging their feet with this taper and when lifting interest rates. But they did have a huge announcement this week. They announced that they're going to speed up the taper, like I said will happen. I said, look, they put out these forecasts. They're always wrong. All these economists, all these people on the news with all their forecasts, they are always wrong. So what they're doing now is they're going to slow the asset purchases by $30 billion every month, all the way up until March, when they'll be no longer buying any US treasuries or buying any mortgage-backed securities, aka they won't be printing money anymore, which is not really printing money, but that's a topic for another video. But the biggest announcement is the cat is finally out of the bag, and they admitted that they are going to have to start lifting interest rates much sooner, and they announced they're going to have 3 interest rate hikes in 2022. Now again, you may say, well look, there hasn't been that much of a big reaction in the markets. Again, this is because the markets have been trying to price this in before it happens. The stock market is normally 6 to 12 months looking forward or looking ahead. Now we are seeing a big sell-off in the high growth or high risk assets, like the high flying tech stocks. We saw the Nasdaq fell about 2.5% yesterday. We're also seeing weakness in Bitcoin. And again, a warning I put out a few months ago with all these crypto moon boys saying it was going to 100K, 150K, 250K. This year, I said, look, it's not going to 100K this year. Now, doesn't mean, I hate Bitcoin or anything like that. I do like investing in Bitcoin when it's in a bear market. But I was just being realistic and saying, look, it's not going to 100K. And what people have to understand with Bitcoin is every time it doubles, it becomes harder and harder to double. Because when its market caps gets to $1 trillion, when it was around $65,000 or 60,000, in order for it to double, another $1 trillion has to be put into that market. And we're not going to see these crazy 500% gains like we used to when we saw it go from 5,000 to 50,000 in a year, because the market is starting to mature. But something else I was also warning about is insiders were selling at record pace. They were dumping their stocks. You saw Elon Musk, he sold his stock at the peak at $1,200 Tesla stock. And I was saying, you think that they may know something, you think they may see something coming. And you know what I think is a bit of a coincidence? All these insiders sold at record pace right before this new variant was announced, And right before the Federal Reserve announced it was going to accelerate its taper, and right before they announced they were going to have 3 interest rate hikes next year. But going back to what I was saying, the reason why the sell-off hasn't been worse is because investors have already priced this in, and this is in line with expectations. And like I said, the Federal Reserve is dragging their feet. They should have already finished the taper 6 months ago when we knew this inflation wasn't transitory and it was going to get worse. And they should have been lifting interest rates now. And so the reason why the markets aren't selling off now is because they're still printing $70 billion a month. Interest rates, it's still at zero. It is still a very attractive time to invest, especially when inflation is at 6.8%. The Federal Reserve is forcing people to put their money in the markets because there is something called TINA. There is no alternative. So really what the Federal Reserve is doing is they're trying to pretend like they want to get rid of inflation when they really don't. They like inflation because it forces people, like I said, to invest. It devalues the US government's debt because remember, there's no way they can pay back the principal. All they can do is service the interest and hope that inflation devalues the debt. And remember, inflation is a hidden tax. And then that way they can get more revenue to service the interest. But of course, this comes to the detriment of the poor and middle class who don't have huge amounts of assets like the rich to hedge against inflation, and all their savings and their wage gets devalued every year. So they're working more and more for less and less. But what you're probably wanting to know is, what do all these signals and what do all these signs mean for what's going to happen in 2022, and how can we prepare and how can we make money from this situation? What my thoughts and opinions are, what I think is going to happen in 2022 is, I think inflation isn't going to go away. I think they may have to lift interest rates a bit more than they're saying, maybe 1%, maybe 1.5%, and this is going to spook the markets. And remember, there's record amount of margin debt, nearly $1 trillion. Once interest rates start going up, people aren't going to be as incentivized to take on margin to invest because borrowing costs are going to go up. So people are going to have to sell their margin. Now, when people get margin calls, this makes a sell-off accelerate. Also, like I said, for every 1% increase in interest rates, house prices and the stock market can fall anywhere between 10 to 15% because borrowing costs go up. And also yields on bonds go up. So people that may have made huge amounts of profits in the stock market in 2021 may decide to take some of their profits out of the stock market and park it into bonds if yields do go up to say 3%, because then at least they're getting some return, especially if inflation does fall back down to 3%, which I think won't happen till late 2022. And this is what's called a risk-off environment. There's high risk when interest rates are at zero because money's cheap, money is easy. Anything that can give you a better return than 1%, people will pile their money in. But once interest rates start going up, once people can start getting somewhat of a return on safer assets, they will take some of the assets out of the high risk assets and put them into safer assets like bonds and precious metals. Now, just another thought I have about the markets and what's been going on. We have seen something that has never happened in the markets in history. We are in a 13-year bull run. There's never ever been a 13-year bull run in the stock market before. This has been the longest bull run in history and the biggest bubble in history because now everybody is all in on the markets. They've forced you to put your retirements in the markets. They've made apps so it's so easy to invest. So a lot of millennials have all their money invested in the markets. A lot of people have piled into real estate. So it's become a political thing to keep markets high and to keep the economy high because everybody is all in. But like everything in life, there is always times and seasons. And what goes up must come down. And remember, if this has been the longest, biggest bull run or the steepest bull run, what do you think is going to follow? Well, what I think is, especially with central banks having little ammunition to fight off any other financial risks that come or any other recessions that come, is a long, prolonged bear market. Simply because, like I said, during the next recession or during the next global financial crisis, central banks aren't going to have the tools to fight it. And if the worst case scenario happens, we start to see inflation like what we're seeing in Turkey right now, and they have to jack interest rates like I've been warning to 3 or 4%, we're going to see one of the greatest deleveragings in history because there is just so much debt in the system, and that would cause one of the biggest market crashes we've seen since the Great Depression. So everyone, why it seemed like it's been a V-shaped recovery since 2020, a lot of that is because we've been recovering from a low base, but I think 2022 could lead us into more of a W-shaped recovery. But everyone, that's just some of my thoughts and opinions what's happening in the markets right now. I apologize for not posting many videos, but when I do post videos, I want to make sure they're quality. I've got new information to tell you. I don't want to be, making videos 3 times a day, repeating the same things. I want to make sure when you see one of my videos, there's something new happening in the markets, an important message that you need to hear. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.